Hello again, and welcome to episode 3. Dr. V here. I'm excited about this episode. The purpose of it is to talk about the housing market and specifically how do you go about buying a house and what things do you have to look out for. We're going to discuss the trends, the economic indicators that are driving the housing market, and we're going to talk about 10 suggestions I'm going to make to you before buying a house or post buying of a house. Before we get into the housing market, let me preface what we're going to talk about by going over two things. One, I had promised you in a previous episode, every week I will be giving you a stock pick of the week. And then secondly, we're going to talk about the topics that I'm going to be going over the next 4 to 8 weeks. Okay, let's start with the stock tip. This week's stock pick, is Emerson Electric. It trades under the symbol EMR. It's a $51 billion company. It's been around for over 100 years, pays a 2.3% dividend, has a return on equity of more than 20%, which is absolutely outstanding. And the stock price has gone from about $50 a share to about $90 a share the last 5 or 6 years. Excellent stock. Be sure to get some advice from a licensed professional, as we talked before, because these are just merely suggestions of mine. Emerson Electric, great stock for those who could sit and watch it grow over time. All right, the second thing to talk about before we get into the housing market is the topics I will discuss the next 4 to 8 weeks. So some of those topics include, but not limited to, how to minimize federal and state taxes, how to buy a car, should you buy extended warranty on an old car, how to buy insurance, the types of insurance you should buy, how to negotiate insurance, which companies you should choose, that sort of thing. I'm also going to go over the 12 success traits that you need in order to have an excellent career path. Remember, gang, the purpose of this entire podcast series is to put you in a position to be financially successful such that by the time you're 50 years old, you have $1 million sitting in the bank minimally, and you have absolutely no mortgage, no car payment, no credit card debt, no lines of credits, etc. That's what I accomplished, and that's why I want to share my experience and my knowledge with you. So let's get into the housing market. By first, let's talk a little bit about the economic indicators that are driving the market, and then we'll talk about some of the trends, and then we'll discuss finally some recommendations. So there's a couple of economic indicators that are driving the housing market. To begin with, of course, it's interest rates. The Feds have caused interest rates to rise for the last 2 years. Mortgage rates have been highest that they've been in like 20 years. A mortgage today could run you 6%, 7%, all depends upon your credit and whether you're doing a 15-year, 30-year adjustable rate, fixed rate, etc. So interest rates is one economic indicator that you always pay attention to, followed by inflation. As you know, with COVID that was out there in 2021, etc., the inflation rate was bizarre. Food prices went up, just about everything went up, and it was becoming impossible to afford a house. In fact, the millennial generation, Generation X, etc., are finding it very, very hard to own a home because you have to have perfect credit, 20% down, closing costs, and the underwriting process is arduous at best. The banks have made it almost impossible. They've gone full circle from giving everybody credit back in 2004 and 5 and 6 to now giving nobody credit. So it's been quite a constraint on the housing market. Okay, now, one of the other things that's driving the market is the fact that existing home buyers like me are holding on to their homes and have no interest in selling, particularly if they have a 2% or a 2.5% mortgage. You're going to learn in a couple of minutes that that's going to change in the short run. So let's talk about that in a minute. Let's talk about the trends that are out there in the housing market. The first trend is housing supply is finally going to increase over the next 24 months as consumers who have been waiting for rates to come down, who have been frustrated, wanting to sell their homes, are now going to cave and start to put the homes on the market. What does that mean for you? Well, finally, prices are going to subside. They're going to come down. And then what you should do, wait it out, baby. Just wait it out. That's what you should do. Buying a home right now is probably not such a great idea unless you have the money and you have the patience to wait till the rates come down and maybe refinance later. Trend number 2, home prices will finally stabilize and drop in areas where the sudden insane rise in price took place. So if you live in a town, a big city where prices have gone up $1, $2, and $300,000, those prices are going to finally start to stabilize, and in many pockets of the country, drop to become a little bit more affordable. Trend number 3, there's going to be a higher demand for single family homes. If I were in your shoes, if I were going to buy a home, I'd look for a 3-bedroom, 2-bath with parking. Forget condos, forget townhomes, and forget 1 and 2-bedroom properties, because families don't like that. Families want 3 bedrooms. Even if you only need 2 bedrooms, get a 3-bedroom anyway, because 3-bedroom, 2-bath, parking, highest resale value, and you probably can't go wrong. Trend number 4, mortgage rates are finally going to come down in the third quarter of 2024. Stick it out and wait. Be patient. Do not get a 6-7% mortgage unless you could afford it today and then refinance it when rates drop. And then trend number 5 is actually a rather exciting one. It's artificial intelligence. AI is going to take over the real estate industry. It's going to be used to write listings, MLS, write flyers, and a variety of other things. Compare rates, you name it. AI is going to take it over, and that's a very exciting thing for all of us. Now, based upon those trends, what should you do? What specifically should you look out for, and the things you should consider if you're on the market to buy a home? I'm going to give you 10 suggestions to wrap up this podcast. If you listen to these, you'll be in a great position to buy a house going forward. The first suggestion, as I alluded to a minute ago, consider renting in the short term and wait out the rate hikes, okay? Wait out until the rates come down. Consider renting. Now, yes, some will say, well, rental rates have gone up too, but they haven't gone up in lockstep with the fact that homeowners insurance has gone up, property taxes have gone up. In fact, I have a couple of homes up in Montana, and property taxes have doubled just in the past 12 months. So it's been an insane roller coaster ride. And you haven't been able to get the rental rates to stay in lockstep with those increases in costs of owning a home. So consider renting in the short term, at least for the next year, and then buy a home in 2025. Suggestion number 2. Recognize, as I said a couple of minutes ago, that the areas most likely to get hit the hardest in terms of any housing bubble, crash, etc., are the areas where the prices are high, and those prices rose at an insane level the last 2 years. So, just to give you a sidebar story, I kind of mentioned this a couple of minutes ago. If you buy a home for $150,000, there's very little room for it to go down. Maybe it'll go down to 135, but it's not going to go down to 75 or 80. If you buy a home for $1.5 million, there's so much room to move, particularly in the fact where the home price has risen to $1.5 million from let's say $1 million. That's where it's going to get hit the hardest. So be cognizant of that when you're buying a house, and take a quick look at what's been happening with the resale value in that given area. Number 3, the third suggestion, look for deals. Only buy a home if you could pay 10% less than the average sale price in the given zip code where you're trying to buy. Is that difficult? Absolutely. You got to look. You got to do the research. You got to go out there and look and look and look. Don't fall for the first or second home that you look at. Keep looking and just try to find a deal. If you buy a 10% below the average sale price in the area, you have built-in equity. And if you go to resell it, and even if there's a drop in price, you're going to be somewhat protected. Okay, number 4, don't go after short-term gains. The real estate market and buying homes, etc., it's a long-term play. Housing and real estate have really gone up anywhere between 6 to 10%, probably on the order of 7.5% for the last 50 years, with the exception of a couple of housing crashes that took place. Just kind of take those out of the equation because those were kind of one-offs. But you could look forward to a good 7%, 8% return with a house. So don't look at it in terms of flipping homes. Yes, there are people making money flipping homes. For me personally, it takes too much time, too much work, too much effort. for a small return. Then you got to deal with capital gains and all this other nonsense with taxes. So again, for me, I just look to buy the home properly at a lower than average price in the area, and that has done well for me over the last 20 years. Number 5, shop mortgage rates and closing costs. Look at least 3, if not 4 lenders. In the secret episode, I carefully lay out for you which lenders have the lowest rates, which closing costs you can negotiate, and how you can get the existing homeowner of the house you're attempting to buy to potentially pay your closing costs. So that's a really important thing. And what does all that mean is you got to shop, research, and then eventually get the lowest rate. You may even want to buy down the interest rate. If you have a couple of shekels to put up front, you could even do that in this market. So that's kind of cool. Number 6, pay attention between the difference with new homes being built and existing home sales. New homes in many areas of the country have actually gone up and actually have done fairly well, while people have been holding on to their existing homes because they typically have lower mortgage rates, so they're fearful of selling to get a higher rate mortgage. So pay attention to that. Ask a real estate agent to provide you with all of the sales information in a given zip code for the last 2 years, both new homes, new construction, and existing homes. Number 7, strive to get the right type of mortgage. A first-time buyer credit, an FHA loan, a fixed versus adjustable, which one makes the most sense based upon your cash position, 15-year versus 30-year. There's all those particulars. Again, in the secret episode, I lay out for you a broker you can call, a bank you should use, all that sort of stuff to help you get a better deal, so to speak. Okay, number 8, when buying a home, I said this at least twice. I'm going to say it again. Buy a 3-bedroom, 2-bath with parking. They have the best resale. They're going to be worth it in the end because, as I said, families can't stand 1 bedroom, 1 bath. So be smart. Think about resale value when you buy the home. Don't just be enamored with the home and buy it because you need a 2-bedroom, 1 bath. I want you to think about the long term and the future. Number 9, if cash is tight, consider an adjustable rate mortgage. Then refinance as the fixed rates subside over time. If your cash position is good and you have more monthly income, go with a 15-year mortgage because the rates are better and you'll pay it off faster. Now, it doesn't matter what type of mortgage you get. I do want you to think about using biweekly payments, assuming the lender will allow it, and then making an extra payment on the mortgage every year so that you pay off the mortgage in 20 years, not 30. You really want to get out of your mortgage before your 50th birthday. That's the whole intention here. And then number 10, be careful with taking on any debt when you go to buy a home, particularly 3 to 6 months before the funding is going to take place. The banks are going to scrutinize your bank statement very carefully and look at any deposit and any expense that you had, including credit card debt, and they're going to torture you with getting answers, and they're going to raise your debt to equity ratio, which is going to cause a denial of the loan. So be very, very, very careful with taking on any debt. And if you get any sort of an odd deposit, you better have a letter of explanation ready for the bank. If you get a gift from your parents, have a formal letter, the letter that's used in order to satisfy IRS requirements for a gift. Make sure you have all that stuff buttoned up. In the secret episode, I talk about using my son, who is number 8 in the country for brokers in the lending business. He oftentimes pays close attention to this stuff when he deals with clients. He works with them on all of the closing costs, all of the expenses, all of the debt, and provides some counsel and some suggestions on what to do and when to do it when preparing to buy a home, let's say 6 months from now. Okay, with that being said, I hope you guys got a lot out of this quick 15-minute episode. Hopefully you'll pay attention to this and get a better deal when you buy a home. I'm excited about what's happening in 2024, and I look forward to seeing and talking to many of you again in the following episode. With that being said, it's Dr. V signing off. Until next time, take care.